Hello, welcome to another episode of podcast about real estate. My name is SeeWing Yee from the Yee Real Estate Network. I've been a real estate investor and consultant for almost 20 years, and I run a real estate investment club, which we have over 1,000 real estate members that join our free newsletters weekly, daily, to seek real estate investing cash flow opportunities in different part of the country. So I assisted over several thousand real estate investors since 2004 to buy cash flow turnkey properties in the fast growing markets, affordable markets where people put 25% down payment to buy a rental property, and they get turnkey property management, and they achieve cash flow property for the long-term investment. Mainly, we do South and Southeast and some Midwest markets, affordable markets, low cost, high rent, good capitalization rate, good yield for long-term buy and hold. Anyway, thank you for watching. And today's title is, are we heading into a pandemic housing bubble? So at this time, I'm going to share my screen. And here it is. And I'm going to use this article which came out today in the Fortune magazine Yahoo article this morning. And the title is Robert Schiller predicted the 2008 housing bubble. And here's his 2022 call. By the way, Robert Schiller, I've been following him off and on for the past 20 years. Now, he predicted rightly that the 2008 market crash. So his data and everything else, he did a real good job. So that's how he made his mark. So his background, Robert Schiller, is that he's a Nobel Prize winner in economics back in 10 years ago. So that's pretty good credentials. And he what he does over the years, he predict the housing market, and he has a PhD in economics, which is and also he's a Yale University professor. So he have tremendous academic credentials. He also created this Case-Shiller index more than decades ago. So a lot of people follow his analysis over the years, and he also author. So without further ado, Robert Schiller. Now, no one is, no matter how smart they seem to be, there's one area of his prediction which is wrong. So we all know the 2008, 2009 housing crash and all that, but then a few years after that, the economy and real estate has recovered, albeit slowly. So around the time frame of 2013, 2014, 2015, when the real estate has been doing very, very well, the market has came back. We have seen very good fundamentals. A lot of appreciation has occurred 3, 4, or 5 years from the 2008 crash. So then he got into this debate with another individual about he still felt at that time, and you can see the video recording that back in 2014 during this debate and few other debates that he had done, he predicted the housing market is gonna go through a downturn back in 2014, 2015. As you know, none of that happened because since the 2008 crash, we have seen steady housing price rise for the next decade into current situation, right? So nobody's perfect. I don't care how smart you are, how much academic credential you are, but anyway, but nevertheless, okay, let's go through the article here. He was being interviewed just recently. All right, so let's go through some of his analysis, and I will share with you my opinion, and then, by the way, you're welcome to share some of your opinion at the bottom on the comment section on my YouTube channel, if you wish. So let me go with you. Let's see what's my takeaway. All right. So let me see what he says. So he thinks, okay, right here, okay. He said the U.S. housing market is heading for trouble. Okay, I've been doing this for a long time. I went through several real estate cycles. I watch and I listen to some of the buzzwords that always comes out from this so-called media, media experts, whatever. So, I always ask myself questions. What are they trying to say? What do they mean when they say a certain word? Because often when in the mass media, in all those headlines out there, people really exaggerate. They use a very exaggerated buzzword. So, okay, headed for trouble. What do you mean by that, headed for trouble? He said that the real estate prices have not fallen since the 2007-2009 recession, which I agree, right? Which I already mentioned that. And then he go on to say that there's a signs that we have to consider that. We have to consider that a drop in the home prices, Schiller says, looks very possible. What do you mean by very possible? That tells me very possible means is not highly probable. Very possible could mean that may not happen. So this comment, very possible, is a kind of not overly pessimistic. He still seems a little bit optimistic that although it's very possible, it may not be likely. All right, so it's just my opinion so far. So let's go on. So he said home prices are expected to fall by something a little over 10% by 2024 to 2025, right? Who knows? No one have a crystal ball, even Mr. Robert Schiller, right? So that's his prediction. In a couple of years from now, there may be a drop in home prices a little over 10%. Not catastrophic if that were to happen. But okay, let's go on. All right. And then he said, let me see what he says. So at its core, the word housing bubble, according to his definition, a housing bubble requires three elements. What are they? The first element is speculation, right? A textbook definition of speculation is where you find a swarm of investors and flippers and speculators rush in to chase after soaring home price appreciation. Well, we kind of see that, didn't we, during the pandemic, right? During the latter part of pandemic started in March 2020, and then during later on, a few months later in the summer in 2020, and then later in the last fourth quarter of 2020, because of the lowering of the interest rate to historic low of 3%, you see, and the advent of people can work remotely. So we have some tremendous people try to buy homes, and we have seen multiple offers in many markets, like 50 to 100 offers per house, everywhere in the country. Not everywhere, many places. So you could argue that is people are speculating. Although the people are speculating, they're not necessarily are investors. They are primary home buyers. People want to move out of California to go to Texas, Austin, Texas, for example. People moving out of the urban environment of the northeast, New York City, and Connecticut, whatever, New Jersey, into south and southeast Florida and a few places, right? So it's not like investors in Wall Street and the hedge funds are speculating. It's primary home buyers that have 20% down payment, that have all cash money, that want to bid for homes because the interest rate is so historically low at 3% or even less, right? Back in 2020 and 2021, And because the payments are low, a lot of people can afford it, right? Because when you buy a primary home, it's all about the affordability. It's all about the monthly payment. So therefore, yes, the first pure definition of housing bubble speculation, we kind of saw that in the past 18, 20 years, causing the resale prices to skyrocket 30, 50 or more percent appreciation in the past 18 to 24 months, right? So the first definition of the bubble speculation is pretty much met. Now let's go over the second element of housing bubble. Is quote unquote overvaluation. Okay, what does that mean? Overvaluation. So there are other sources. A housing bubble sees home prices go far beyond what incomes historically would support. Okay, now we got it, right? Now we got it. Now, you know what I mean? Like CoreLogic, another very reputable organization, and Moody's Analytics and Florida Atlantic University, they have evaluated over 400 markets. Do you know the markets that have gone through skyrocketing appreciation in the past 18 months? There were like 400 real estate cities and markets were overvalued because the price of the homes, the income, the people that are too low to support the high home prices. So that is the definition of overvaluation, right? So you can make the argument, technically speaking, that's what we're seeing, right? When the markets like Boise, Idaho, and Phoenix, Arizona, and Las Vegas, and Austin, Texas, and Raleigh, North Carolina, we have seen massive appreciation over the past 18 months due to low supply, high demand, and low interest rate. And all the locals, right? All the locals, the people that live in this market for many, many years, they have a very modest income levels. They are being priced out because all the outside buyers, all the people that have the ability to work remotely, they decided to go to a very affordable market, such as the one in the Sun Belt, areas I just mentioned, right? And therefore, the locals that making modest incomes cannot afford to buy homes in the area that they live in all their lives because outside home buyers are moving, or the migration of people from California and Pacific Northwest and Chicago and Northeast Boston, New York City, right? Those people with high income, with capital resources, they're moving into the Sun Belt, Southwest and Southeast because the homes a few years ago were very inexpensive. So because of low supply and high demand, the home prices got bid up at an outrageous level. So therefore, when the data came out, that's why many of these firms, CoreLogic and what have you, have identified many of these markets, cities as overvalued. So second definition of bubble, overvaluation, you could make the argument that it met definition of a housing bubble. So the third element, all right? Before we go there, so Robert Schiller. So the third element is of a housing bubble. So what is it? The third element is the bursting of the bubble itself. That's a third element. That's a third criteria to meet the definition of a housing bubble. The three elements must be met. If you do not have all three, you're probably not going to have a housing bubble, because a housing bubble is at least a double-digit decrease in prices, right? At least 20%, maybe even 30, maybe even 40%, right? Keep this in mind. Keep this in mind. All right, so let's go further. While Schiller thinks a double-digit decline in home prices is possible, many in the industry don't agree. So meaning the Mortgage Bankers Association, Fannie Mae, Freddie Mac, CoreLogic, and Zillow, they do not agree that will be a double-digit decline of home prices moving forward. Okay, and so and a few others. Now, so why many of the other expert resources does not believe there's a busting bubble? Okay, now for starters, the primary cause of the 2008 crash was the subprime mortgages, meaning anybody and their brother can qualify to get a loan, right? You can fog a spoon, you qualify for a mortgage. You have no doubt loans. You have yeah, you know, all this kind of crazy mortgages with so many people qualify to get homes. They have no business should be approved. So that's the subprime mortgages, or primarily caused the housing crash. But now, since the housing crash in 2008, 2009, the Dodd-Frank regulation came out that they decided that in order to get a loan these days, you must be very, very qualified. You have to document everything. You have to have a FICO score of 700 or above. So getting a loan in the past 10 years since the housing crash of 2008 is quite extensive, and so that's one of the reasons why most experts do not believe we are going to see a double-digit decline. All right, so let me see what else. And then finally, the thing that you should know about, right? Because of the tremendous lack of construction since the recession 2008, there has been a historic low supply of homes, and the demand are still very high. Even though right now, right, even though the interest rate has gone from 3% to 5.5% to 6%, the demand has moderated right now. Still, we need an annual supply of 1.5 million homes moving forward, but we are only selling to the tune of around 500,000 homes are predicted for this year. So we are way below estimation. When you have economics 101, when demand exceeds supply, home prices increase. So in fact, many experts claim we are at least 4 million homes that we need. We need at least 4 million homes. Some experts say even more, in order to achieve balance, equilibrium, right? And right now, in many markets throughout the country, the availability of homes are around 1 month to 2 months, right? There are enough homes to sell to last 1 to 2 months, whereas 6 months supply of homes is a balanced market. Right now, we're not seeing that. At the most, we're seeing 2 months of homes available for sale. So the supply are still historically low. Does not matter. Some of you are thinking, oh, there's a lot of inventory out there right now, a lot more than 6 months ago. Yeah, because not enough people are buying. A lot of people are priced out of the market, so they're not buying homes. That's why the inventory is higher now than prior to the early part of this year. All right. So that's the thing. So that is my conclusion. My conclusion is the third element, the bursting of the bubble. Home must plummet in double digit, 20%, in order to have the third element of a housing bubble, which is the bursting bubble. So we met the speculation aspect of the definition of housing bubble. We met the overvaluation aspect, but clearly we're not meeting the bursting bubble, housing must plummet aspect, because of low supply and still pretty high demand. All right, so it remains to be seen what's going on for this year and below. And so I would like to hear your comments. You feel free to comment on below on my. Then I'll look at some of the comments where we have a. Let's see how I can respond to what you guys are thinking. You think there could be a bubble? You think the price is going to come down? You think the price will moderate in the next couple of years? I want to hear your thoughts. So subscribe to my channel, click the button. If you like the channel if you want, or better yet, just enter my website, the yeelistenetwork.com. The information is at the bottom, and sign up for our free newsletter so you can receive a lot of great information. All right, so thank you so much for listening. My name is SeeWing Yee from the Yee Listen Network, and stay tuned for our weekly real estate videos and of what's trending and what is the most important things you need to learn about real estate right now. Thank you so much. This is SeeWing Yee from the Yee Listen Network. Have a nice day. Bye-bye.